banking industry is reeling from the shocking news that Capital One is going to buy Discover Banking for an unprecedented $35 billion. This historic agreement is a calculated move that has the potential to drastically alter the banking and credit industry. In addition to being a huge financial transaction, it represents the coming together of two industry titans, each with distinct advantages and a strong market position, and highlights how quickly the financial services industry is changing in an increasingly digital environment. This acquisition represents a significant turning point in the histories of the two businesses, with the potential to create a consumer finance behemoth that optimally utilizes their respective advantages to achieve unmatched success. Long regarded for its creative approach to banking and financial services, Capital One sets itself apart with a customer-centric business strategy that makes better use of technology to satisfy the demands of its clients. The strategic acquisition of Discover Financial by Capital One, which has a long history of developing innovative credit solutions and digital banking services, highlights the company's goal to broaden its product line and customer base. It is anticipated that Discover's extensive range of financial services and products would further Capital One's objective of offering clients outstanding value through accessibility, convenience, and technological innovation. The magnitude of this $35 billion deal shows how much Capital One is investing in Discover's customer relationships, brand equity, and operational skills. It is expected that this strategic decision will result in significant synergies, improving operational efficiencies and spurring growth. It is anticipated that the combination of Discover's and Capital One's complementary asset will simplify service and product offering, giving consumers access to more integrated and through financial solutions in the end, with the goal of building a more formidable organization that can compete more fiercely on the international scene. This deal represents a daring venture on the direction of finance. Navigating the intricacies of combining two big businesses, however, comes with its own set of difficulties. Aligning corporate cultures, merging technology platforms, and streamlining operational procedures are all part of the integration process, which is a challenging undertaking that calls for careful planning and strategic vision. Realizing the full potential of this union will depend on how well the unique identities and strengths of Capital One and Discover are combined while causing the least amount of inconvenience to consumers and staff. This acquisition's feature emphasizes the necessity of a well-planned strategy to guarantee a seamless transition and the realization of the anticipated synergies. The purchase of Discover Financial by Capital One marks a turning point for the financial services sector as we move forward. This action reflects a larger industry trend toward consolidation, which is being fueled by the need for size, technological innovation, and flexibility in response to shifting consumer preferences. Such smart acquisitions help position businesses for long-term success in an era where digital revolution is speeding up. This transaction is poised to redefine industry norms and establish a new bar for what is feasible in the consumer finance space by uniting two complementing powerhouses. In conclusion, Capital One's $35 billion acquisition of Discover Financial is a calculated move with significant ramifications for the financial sector. The financial industry is closely watching Capital One and Discover's ambitious journey together, anticipating the revolutionary effects that this combination will have on the future of consumer finance and banking. This transaction aims to create a new paradigm in financial services by combining two companies and leading the sector in a new path where innovation, consumer value, and strategic growth come together.